Welcome to Markets Now. I'm Michelle Rourke with Mike Zuzulo, Global Commodity Analytics. We had a mostly higher day in the livestock, with the exception of the feeders. Over in the grains, lower across the board. And Mike, let's talk about kind of what came together to pressure, especially corn and soybeans today. Was it South American weather or all of this tariff talk?
I don't think we had the South American weather to support us and to support that bullish case that we've had the last couple weeks, Michelle. We're not out of the woods yet when it comes to Argentina. Probably saw about 60 or 65% of its main Pampas region get a nice rainfall and maybe a little bit more than the trade was expecting on Friday. We still have a significant delay in getting center west beans out of the fields and center west corn, safrinha crop planted. I want to say the major player that keeps track of that in South America put us at about 2% planting on safrinha corn versus about 11% a year ago at the same period of time. So weather is probably less of a bullish factor. I wouldn't quite call it a bearish factor, though. I really think the heart and soul of this market from Friday's close to Monday's close is the realization by the trade that President Trump's foreign policy and his trade policy are essentially one and the same. And these tariff threats are, I think, real solid threats that they will be put into place if we don't get what we want in terms of a foreign policy, especially as it pertains to immigration. So therefore, Canada and Mexico, they're on the table on February 1st. And I take President Trump and his administration at their word.
Yeah, we had the back and forth over the weekend with Colombia, which ended up to be a non-event. But February 1st, is that, you think it's a given that we're going to have those tariffs go into place, those 25% tariffs?
If something's not announced, I think the way we closed on Friday, and you could see kind of a momentum sentiment shift in the grains, and the weekly corn chart in particular looks very vulnerable to me. We don't have the leadership to the upside in the meal or the wheat, which has always been kind of a prerequisite. I think you add all these things up, I think you better be ready for a 25% tariff on those two countries if we don't get some announcements by the end of this week. And does that then reignite the dollar bull? And does that really hurt us against the Brazilian currency, which actually has been showing a buy signal against the US dollar on the monthly chart? So we've been able to contain that dollar, and we can see how good the markets can be when you get friendly supply demand information if you can contain the dollar. I just don't want to go back there to that level again where we have the dollar as a major headwind and takes away a lot of bullish enthusiasm.
Right. Mike, did we also see pressure because of some more weak economic data out of China?
Yeah, I think this is where the crude oil and the copper markets and the idea that some of my colleagues, and I wish I could say I felt the same way, feel like there might be another new commodity demand super cycle company. I just don't feel like it's coming from China at this point because their economic data, as you say, their PMI, the weakest in 5 months, they reported early Monday morning, Michelle. They're continuing with that pattern of having to export their way out of the market because their domestic market continues to suffer. And that's really where we kind of rub heads and rub together in terms of policy. They want a weaker currency. We don't want them to have a weaker currency because President Trump wants to bring manufacturing back to the United States. And so that's the next thing on our list to have to deal with once we figure out what to do with our North American and South American trading partners.
And with their economy so weak and them wanting to protect their farmers because of low prices, how hard will it be to get a deal struck?
Well, this is where it goes back to how much does South America have to compete with us? And I think that's the name of the game as we get into the springtime and as we in North America want to get ready to plant. How good or bad is the Black Sea wheat crop? How good or bad are the row crops in South America? That either will take leverage away from the U.S. or add leverage as it pertains to the agriculture commodities. And then that goes back to also the U.S. dollar. If China and the United States could do something similar to what happened in the mid-'80s with Japan, very similar situation, deflationary pressures in Japan in the mid-'80s. And we came in 1985, President Reagan ushered in the Plaza Accord, where we strengthened the Japanese yen. I think President Trump's people may want to go after something like that. If China participates in that, that could be a real supportive feature, and that kind of brings back the demand through the currency markets.
Yeah, and you talk about the dollar. You can't have a weak dollar when you've got tariffs, right?
No, you really, historically, you just can't get from point A to point B. And you also want the crude oil market to go down as well. It's going to be very difficult to have the crude oil go down and the dollar go down historically.
So, in your mind right now, have corn and soybeans put in intermediate tops because we went up to some chart resistance areas we couldn't take out last week?
We did. And I think fundamentally, supply and demand wise, it's going to be difficult for the corn to go it alone. And it's going to be very difficult for the beans to be able to sustain these price levels at this current level, 1050 new crop beans against a 165, 170 plus Brazilian soybean crop doesn't add up to me. So I'd say you've got a lot more headwinds at this point than you had a month and a half ago. And we probably don't have any more USDA data like we did on the January report to bring something new into this market. It's probably going to have to come from either South American weather or the negotiations going very, very smoothly when it comes to the tariffs.
Gotcha. Okay, the wheat market did post higher weekly closes last week, but that market has seen the funds continue to hold that short position. So what do you see changing this market to maybe being a leader to the plus side, or is there any chance of it?
Two big things that we had going for us a week ago, we still have one, and that is the Russian ruble continues to be strong against the dollar, and it seems as though the Russian supply side is smaller and shrinking, and their export market is shrinking as well compared to year ago levels. So as long as we keep seeing that, we've got a pretty decent chance with a pretty rough European crop and tight European supplies to hold the line. What we don't have, though, is the dry weather in the southern plains. Both the models on Monday, GFS European models, are suggesting a pretty good dose of rainfall for about the eastern half of the hard red wheat belt in the next 5-6 days. If we get that, kind of takes away the weather bowl coming out of dormancy for now.
And the winter kill concerns that we had last week aren't a concern anymore?
I don't think the market's ready to step in there and try and buy it on winter kill concerns. They probably need something more. I'm concerned about it, but I'm not going to put probably clients' money, any more money into it at this point when it comes to trying to play a winter kill threat.
Gotcha. Okay, live cattle futures. We made new all-time highs again here today on the heels of record cash trade with the weighted average over, I think, 210. How long can we keep going higher in that market?
The similarities between the corn and the cattle continue. We've talked about this for several months, and I think it goes back to the corn and the feeders. If the corn breaks, the feeders maybe have some support off of that, but I think you don't have the same tailwinds or supportive features in the cattle as a whole at these price levels. You really got to feed the bull. The cattle on feed report did some of that by keeping those marketings elevated, which is very necessary. We get those semi-annual, but actually an annual report coming up here at the end of the week because of the fact that we saw, or at the end of the month, I should say, because of the fact we didn't get a July report, that 28.2 million head of beef cow inventory. That's going to be the key number to watch. I guess to answer your question more directly, Michelle, I'm nervous about the feeders from a standpoint is, can the cash really generate much more upside in what I think is more of a negative seasonal time period as we get into February? And I think the other thing that we've been running off of is this cold weather. It's drawn those packers out to bid up. It looks like the weather's moderating at this point.
Yeah. The feeders actually started off, made new highs for the move or new contract highs there, and then ended lower on the day. But is that market also starting to anticipate the border opening to Mexico? Because it seemed like the fact that they closed the border, didn't have it open last week, was part of the push that we got in that market.
Yeah, I agree. The border and HPAI seem to be the two uncertainties out there that keep the bull coming in for more. The one thing that, to answer your question on the feeders, that I really want to watch is the January goes off the board here at the end of the month. Excuse me, it's carrying a $4 to $5 premium against the soon-to-be lead month March. If the January ends up being the high and March never goes up to get to where the January is, that could be a good indication that the cash high may be in.
So we should be getting some hedges in what puts? What do you think?
Yeah,
I
I'm
don't know.
starting off with the feeder cattle and doing bought puts, and I'll do fat cattle after that. I think the Q2 is about as far out as I want to go right now until I see those annual cattle numbers at the end of the month. I would be willing maybe to take some unlimited risk calls, generally speaking, staying within compliance once I see more numbers, once I get some technicals underneath me that I feel like I can trade underneath.
All right, so we've only had the Trump administration in for 1 week, and it's been a wild one. They hit the ground running. Anything else that you're watching out of the administration that could have market impacts going forward here?
Yeah, I mean, we still have a question mark about biofuel policy, and I think that is one of the big keys to the piece of the puzzle and the big picture trend as far as what our demand base is going to look like this marketing year. The other thing is what we heard last week. Again, taking President Trump and his administration at their word when we heard the USDA nominee say, if we go tariff route and we're going to do direct payments to producers, I think they will. They did it in their first term. That's going to create more price volatility, if you ask me.
No doubt. All right, thanks so much, Mike Zuzulo with Global Commodity Analytics. That is Markets Now.